In a dramatic escalation of the ongoing trade war with the United States, China announced on Friday, April 11, 2025, that it would increase tariffs on all US imports from 84% to a staggering 125%. The decision, revealed by the Chinese Commerce Ministry, came mere hours after President Xi Jinping met with Spanish Prime Minister Pedro Sanchez and declared that tariff wars yield no victors. Xi's remarks, made during discussions aimed at strengthening ties with the European Union, underscored Beijing's intent to rally other global trading partners against what it perceives as US economic coercion. The Commerce Ministry's statement suggested that the new 125% tariff rate could mark the upper limit of China's tit-for-tat measures, noting that US goods at this level face significant market resistance in China. If the US persists in imposing tariffs on Chinese exports, China will disregard such actions, the ministry declared, hinting at additional countermeasures yet to be unveiled. This move follows a series of US tariff hikes under President Donald Trump, who has raised duties on Chinese imports to 145% since taking office, a figure confirmed by a White House official. Global financial markets reacted with alarm. Asian stock indices plummeted, with Japan's Nikkei dropping nearly 5% and Hong Kong's markets on track for their worst weekly decline since 2008. Wall Street's S&P 500 fell 3.5% on Thursday, now down 15% from its February peak, reflecting investor unease over the trade dispute's economic toll. Oil prices, meanwhile, continued their downward slide for a second week, compounding fears of a broader slowdown. French President Emmanuel Macron described the US's recent 90-day tariff pause on several countries as fragile, warning that it leaves businesses worldwide grappling with 90 days of uncertainty. The US tariff pause, announced earlier this week, temporarily halts duties as high as 50% on dozens of countries, but pointedly excludes China, Canada, and Mexico. Canada and Mexico face 25% tariffs tied to fentanyl-related trade measures, pending compliance with the US-Mexico-Canada trade agreement. China, meanwhile, has faced unrelenting US pressure, prompting Beijing to retaliate with not only tariffs but also restrictions on Hollywood films and trade blacklists targeting 18 US companies. Xi's diplomatic outreach has intensified amid the trade tensions. His meeting with Sanchez followed discussions with leaders from Saudi Arabia and South Africa, with plans for a Southeast Asia tour next week, including stops in Vietnam and Cambodia. In Beijing's official account of the Sanchez meeting, Xi called for China and the EU to jointly uphold global trade rules and resist unilateral bullying, a clear jab at the US. Sanchez, in response, advocated for a balanced EU-China relationship built on dialogue and cooperation to resolve differences. Elsewhere, nations are scrambling to navigate the fallout. Vietnam has signaled its readiness to curb Chinese goods transshipped through its ports to the US, hoping to secure favorable trade terms. Taiwan, facing a 32% US tariff, has offered zero tariffs as a starting point for negotiations. Japan's Prime Minister Shigeru Ishiba has formed a task force to engage Washington directly, with a possible visit planned next week. US Treasury Secretary Scott Bessent, addressing concerns at a cabinet meeting, claimed over 75 countries are eager to negotiate trade deals, expressing optimism about resolving tensions with China. Trump, speaking to reporters at the White House, struck a conciliatory tone, describing Xi as a longtime friend and expressing hope for a deal beneficial to both nations. However, no direct talks between the two leaders have been reported since before Trump's inauguration. China's Foreign Ministry spokesperson, Lin Jian, remained defiant, stating Beijing would not tolerate violations of its rights or disruptions to global trade rules. The Commerce Ministry, while open to dialogue, insisted any talks must be grounded in mutual respect. The trade war's ripple effects continue to stoke fears of economic instability. Goldman Sachs now estimates a 45% chance of a US recession, while Yale University researchers note that US import duties are at their highest in over a century. Even the EU's decision to pause its own counter-tariffs offered little relief to businesses grappling with rising costs and supply chain chaos. As the US, China, and other global powers jockey for position, the path to de-escalation remains uncertain, leaving markets and industries on edge.